Hi everybody, and thanks very much for tuning into our webinar on everything you need to know about non-resident tax in association with University of Florida. So just to introduce ourselves firstly, my name is Elvira King and I'm an account manager here at Sprintax, but I'm also joined today by my colleague Neil Duffy.
Hi everyone, thanks for tuning in.
Great. So before we get into the real information, just quickly wanted to cover some housekeeping. So I suppose in terms of a disclaimer, we'll always start a session like this with a disclaimer. So because it's tax we're talking about, we're going to provide you with a general understanding of the tax principles as they apply to international students and scholars, and as such is for informational purposes only. So each individual has a unique tax position and is responsible for their own tax determination and compliance. So I suppose what we're saying here is that we can't give you individual tax advice. That is the job of the Sprintax software itself. So I suppose, we'll give you a general understanding of the tax principles as they apply to you, and you'll be more comfortable with your tax filing obligations after this session. So looking at an overview of what we'll cover today, so we're looking at important considerations for non-resident students and scholars. So we'll look at things like, am I resident or non-resident for tax? Who needs to file? Different income documents you may receive, and so on. Then we'll look at employment and receipt of US income. We'll also look at some of the pre-employment tax forms that you may need to complete, and then understanding the implications of filing an incorrect tax return or maybe not filing at all. So moving then into the first section where we'll cover the important considerations, things you need to be aware of this tax season. So the tax filing deadline is generally April 15th of the year after you're filing for. So it's usually April 15th. If April 15th falls on a weekend or a holiday, then that will move to the next working day. But typically the tax filing deadline is April 15th each year. And all international students and scholars must take action and file taxes. And also University of Florida provides free access to Sprintax returns. So again, just to reiterate, April 15th is the tax filing deadline, and you do need to have your returns submitted by that date. So one of the first things that we always look at when we're looking at non-resident taxes is residency for tax purposes. And it's important to mention that residency for tax purposes is independent of your visa or immigration status. So although you may be non-resident on your immigration status, you could actually be resident for tax purposes. Because when it comes to resident versus non-resident for tax, it's all based on the number of days you've actually spent in the US. So generally, most international students or scholars on F, J, M or Q visas are considered non-resident for tax purposes. But the rule that the IRS follow is that if you're on an F1 or a J1 student visa, generally you're considered non-resident for the first 5 calendar years here in the US. After that 5-year period then, the IRS will look at what's known as the substantial presence test. So essentially, it's looking back at your previous 3 years and it's looking at your days of presence to determine your residency status. So it'll look at all of your days of presence in the year you're filing for. It'll take 1/3 of your days of presence in the year before that and 1/6 of your days of presence in the year before that. And if that totals to 183 days or more, then you would be deemed resident for tax purposes. Now, if you're considered resident for tax purposes, you need to submit a resident tax return. So if you're going through Sprintax and you complete step 1 and we determine that you are a resident for tax purposes, we'll stop you there and we'll point you in the right direction. But the good news is you don't need to worry about those calculations. Sprintax will work all of that out for you. So all you need to do is to enter your information in step 1, enter your entry and exit dates and the information that's required in there, and we will work that out for you. Now, you'll have heard me mention a calendar year there. So if, for example, Neil entered the US on December 30th, but his semester at his university didn't start until February, the IRS will actually count, that year, that previous year where he's arrived in December, that'll be classed as his first calendar year of presence in the US, even though he's only spent 2 days in that year in the US. So just to be aware of that. Residency rules then, they change slightly for researchers or scholars on J visas. So if you're a researcher or scholar on a J visa, instead of that 5-year grace period where you're considered non-resident, you actually only get 2 years. And after you've been in the US then for 2 years on that J Scholar Research Visa, the IRS will then look at the substantial presence test. So next then, we're looking at who must file. So really important to be aware that every non-resident who's an exempt individual must complete at least Form 8843, irrespective of income or days of presence. So, everybody listening to this session today, if you've been in the US at all during the calendar year, you will need to submit something when it comes to taxes, minimum being that Form 8843. If you have received any income over $0, any US income over $0, then you will trigger a federal filing requirement, which is the Form 1040 NR. So any income over $0 will trigger that federal filing requirement, the 1040 NR, but everybody needs to submit Form 8843. It is the minimum filing requirement for all non-residents in the US. So looking at Form 8843 then, and what is it? Well, as I said, it is the minimum filing requirement for all non-residents in the US, and essentially it's a declaration of your non-resident status for the tax year. Now, it is a pretty straightforward document. It'll request your name, your address, the type of visa you're on, and the number of days you've spent in the US. And by giving that information then, you've completed your obligation for Form 8843 filing. But I suppose also important to mention that Form 8843, it's also known as a statement for exempt individuals and individuals with a medical condition. So you may be thinking, well, what on earth is that? Well, if you think of it as a declaration of your non-resident status with the IRS to basically say, hey, my name is Elvira, I'm an F1 student. Because I'm still non-resident for tax purposes, I'm still an exempt individual, so please don't count my days of presence in the US towards that substantial presence test we spoke about earlier. So again, it's the minimum filing requirement for all non-residents in the US. So, everyone will need to submit this if you were present in the US during the tax year. So looking at some of the incomes then that will trigger a filing requirement. So obviously the first and most common is your employment income. So maybe you had an on-campus employment, you worked in the canteen or the library, for example, and the wages and salary received from that, it is going to trigger a filing requirement. It's considered income and will trigger a filing requirement. Maybe you've got a scholarship that covers costs other than tuition or tuition-related expenses. So maybe your scholarship covers room and board or includes a stipend. That is considered income and will trigger a filing requirement. Or maybe you've got investment income or you've invested in cryptocurrencies. Or some other types of income may be less common, but nevertheless will trigger a filing requirement. Maybe you've got gambling winnings, or you've attended a focus group and you've received a gift card in payment for that. Or maybe you've rented out a room in your apartment for over 14 nights on Airbnb. All of this will be considered income and will trigger a filing requirement. On the other side, there are some incomes which won't trigger a filing requirement for non-residents. And the first is a scholarship for tuition and tuition-related expenses. So if you receive a scholarship that covers tuition, but also covers your room and board, and in some cases, maybe your transport to and from school, because that scholarship covers areas that are outside of tuition, that is a taxable scholarship and is considered income. But if your scholarship covers just your tuition, then the IRS are not concerned with it and you don't need to report it on your tax return. The second point here then relates to scholarships received from outside the US. So if you receive a scholarship from your home country to travel to the US to study, the IRS won't tax this because although it may be taxed in your home country, it's not US source income. So they won't be interested in that and you don't need to claim it on your tax return. So you'll have probably noticed from my accent that I'm from Ireland. So if, for example, Trinity College in Dublin decided to send me to the University of Florida to study for a semester, the scholarship that I receive from Trinity College in Dublin, it's something that I will likely pay tax on back home in Ireland, but it's not something that I need to include in my non-resident US tax return. Points 3 and 4 then are similar in that although you may be taxed on them overseas, the IRS are not concerned with it when it comes to filing your non-resident tax return. If you've worked in your home country before you arrive in the US and you bring this money with you, again, it's not US source income and you don't need to include that in your tax return. Then we have interest on regular savings accounts here. And it's important to point out that for most international students or scholars, if you have a regular Bank of America account, for example, then that's going to be tax exempt and the IRS won't be concerned with that. But if you have the likes of a Robinhood investment account that's accrued a lot of interest each year, in that case, the IRS may be concerned with that. And certainly if you're making a gain on that investment account, there's a high chance that your broker or the person you've made your investments with will issue you with an income document, and you will need to include that on your tax return. But for most standard accounts, you don't need to claim it. So next then, we're going to look at some of the income documents that you could receive. So the first is a W-2 document, and Form W-2 is really the most common document that you could receive. It relates to wages, relates to salary or compensation, and it would include details of any income that you've earned and any tax that was withheld on that income. And also just to be aware that you could receive multiple W-2 documents if you've had multiple employers. So if you worked for 2 different employers during the year, you'd expect to receive a W-2 from each one. And typically the deadline to receive your W-2 is January 31st. The second document then is the 1042-S document. And this document applies mostly to taxable scholarships, stipends, any royalty payments, prizes, any tax treaty exempt income will typically be outlined on a 1042-S document. So let's go back to the scholarship I mentioned a little while ago. If your scholarship is covering anything outside of tuition or tuition-related expenses, then you would receive a 1042-S for it. But if your scholarship is not taxable, then you wouldn't receive this document. And again, the deadline to receive your 1042-S document is March 15th. And the final document then is the 1099 series document, and that covers everything that's considered miscellaneous income. So what might that be? Well, maybe it's rental income from a property that you've had on Airbnb. And in such case, if you've received income from Airbnb, then they will issue you with a 1099 series document. Also, if you had an investment account and you've made a gain on that, there's a high chance that your broker or the person you've made your investment with will issue with that 1099 document. Also, commissions are under the 1099 umbrella, but the most common one would be independent contractor services. So typically, if you're working independently and not as an employee of a business, but as a contractor, you will receive a 1099 at the end of the filing year. So I suppose important to mention here that not everybody will receive all of these income documents. You will only receive the documents that are relevant to you based on the income that you've received. It is important that you do have your income documents with you when you're sitting down to prepare your taxes. So do wait until you've got everything you're expecting before you sit down to prepare your taxes. So the next thing we're going to look at then is your spouse and dependents and how they should be treated when it comes to tax. So the IRS, they are pretty strict on how your spouse and dependents should be treated. So if they've never worked at all and they've received no income, but they were present in the US during the tax year, then they will still need to complete that Form 8843, similar to you. But if they did receive any income, then they will trigger a federal filing requirement. And if they were in a state where there's state tax, they may also trigger a state filing requirement. So they basically have the same rules as you. Also, just to be aware that non-residents can't file a joint return with their spouse. They must be filed separately. However, if you're a non-resident and you're married to a resident, you can elect to file jointly on your spouse's resident tax return, but we would recommend doing the math on both options first to see which option would be more beneficial to your tax position. So in terms of state taxes then, I suppose up until this point we've chatted about how everybody, if you were present in the US during the tax year, even if you didn't receive income, you need to submit Form 8843, the minimum filing requirement. If you've received any US income over $0, then you will trigger a federal filing requirement. But it is possible you could also trigger a state filing requirement too if you lived or worked in a state where there's state taxes. Now, Florida doesn't have a state income tax, so this would be if you have any income from another state, where state taxes are applicable. But state tax rules differ from state to state. where some states will say that you only need to file if you earn over $8,000, for example. Some will say $17,000. Others will say that you need to file from the very first dollar. And of course, we know there are states like Florida that have no state income tax. But it can also depend on things like your visa type, the number of days you've spent in the state, and even down to the type of accommodation you've lived in. So I suppose just to be aware, if you've lived or worked in more than one state during the tax year, you may trigger a state filing requirement there. So next then we have the ITIN. And I know this can definitely be a bit of a trouble area, and it definitely causes some headache and heartache for you as international students and scholars, but I'm sure also for the international office at University of Florida. But for anybody that may be unfamiliar, ITIN stands for Individual Taxpayer Identification Number, and it's generally required by individuals who receive taxable income and they need to file a federal tax return, but they're not eligible for a social security number. So it can be pretty common, and most common among scholarship recipients, such as athletes, for example. So in terms of the application process, the application form is the W-7, and it can be applied for in advance of filing the federal tax return or alongside the federal tax return. But the process does change depending on which route you're going to go down. So in terms of applying for an ITIN in advance of filing the federal tax return, a responsible officer at the school can certify copies of the required documents. But where the process changes then is where you're applying for an ITIN alongside your federal tax return. At that stage, the responsible officer at the school can no longer certify the documents unless they're a certified acceptance agent. So in this case, if you're applying for an ITIN alongside your federal tax return, you'd need to have your documents certified by a CAA, a certified acceptance agent, or at a local IRS office, or at the governmental department that issued your identification document, or at a US embassy or consulate. But I suppose just to mention that if you have a social security, you won't need an ITIN. So this would only be needed by somebody who has triggered a filing requirement but doesn't have that social security number. If you only need to submit Form 8843, you don't need to have a social security number or an ITIN in that case. So next then we have Form 1098T. And this is a really important slide because it's the #1 form of misfiling every year for non-residents. So Form 1098T applies only to residents, and it's an educational tax credit of $1,000. So if you were to go to a website that prepares taxes for residents and you enter information from Form 1098T, you could get a $1,000 tax credit. But as a non-resident, you're not entitled to receive this. And if the IRS realise that you've claimed this tax credit, not only will they look for that $1,000 back, but they could also apply fees and penalties. So just to be really careful of that. Also just to note that University of Florida issues 1098T to all students with a social security number on file, even non-residents. So it can cause a bit of confusion. So if you've received Form 1098T and you're non-resident, just put it away somewhere safe for your own records. You're not going to need it when it comes to filing your non-resident tax return. This would only be applicable if you were considered resident for tax purposes. So as a non-resident, put that away somewhere safe. You will not need it when it comes to filing your non-resident tax return. And next then, just looking at timelines for a refund. So if you're due a refund on your federal taxes, the IRS will say it generally takes between 6 weeks and 6 months for that to come true. Now, we generally see it's on the shorter end of the scale. You know, it normally comes through maybe within that 6-week period, but they do say to allow that time frame. Now, you can check the status of your federal refund on irs.gov/refunds. You'll be able to get an update on it there. If you're due a refund on the state taxes, so if you've triggered a state filing requirement in another state outside of Florida, and if you're due a refund for that, we'd say do allow that same kind of time frame. Do allow at least the 6-week period for the refund to come true. And if you do need to follow up on it afterwards, you'd need to reach out to the State Department directly to follow up on that. So that takes us into the next section then, so employment and receipt of US income during the year. And I'm going to hand over to Neil for this piece.
Great, thank you, Elvira. So, as a non-resident alien, you're generally going to be subject to federal income tax withholding on all US source payments. you will be taxed on your wages at a graduated rate. So this starts from 10% and goes right up to 37%. And this really is dependent on the level of income that you earn. So obviously, the more income you earn, the higher that rate of tax is going to be. So for that reason, expect to see at least 10% federal taxes withheld on your paycheck. So you may also be eligible to use a tax treaty to reduce this rate of tax withholding, or in some cases, exempt it entirely for a certain amount of income. But we'll look at tax treaties in more detail as we progress through the slides. You may also have state withholding, and this will be dependent on the state that you're working in. Now, just to note that the state of Florida does not have state income tax, so that applies only for work performed in certain other states. Next up is FICA taxes. So FICA is a very important tax, also known as Social Security or Medicare. So what exactly is FICA? So if you're in the US at the age of 65 and you need assistance paying your medical bills, FICA will assist you with that. But in the eyes of the IRS, non-residents generally won't be here long enough to enjoy the benefits of that tax. So generally, non-resident students and scholars on a J1, F1 visa are generally exempt from paying FICA. So this means that you're exempt from paying Social Security and Medicare taxes unless you've been in the United States long enough to be deemed a resident for tax purposes. And then just to note, if you are a resident for tax purposes, you will be subject to FICA taxes. And this is regardless of whether you're on a J1 or an F1 student visa. So what do we recommend? We recommend checking your W-2. On your W-2, there will be a section that says Social Security or Medicare. And if you think you are exempt and any amount of tax has been withheld, we would recommend you take the following steps. So first, you should reach out to your employer to see if they can provide a refund. If they can't, which is common in a lot of cases, you can then go ahead and submit a FICA return to the IRS to request it back from the IRS. And this can be done via Form 843 and Form 8316. So the next slide gives a comparison of the impact of FICA taxes on employees. So you will see where FICA is withheld in error, you could end up having a significant amount of money withheld from your paycheck that didn't need to be withheld. In the example here, you can see that the person earning $20,000 could have $1,530 of FICA withheld. And the person earning $40,000 could have $3,060 of FICA withheld. And all of this is withheld in error if you were exempt. So it is worth ensuring that you're taxed correctly from the beginning. We recommend checking your pay stubs, checking any of your income documents to ensure that all of that is corrected from the very beginning. And then just to reiterate again, if you have FICA tax withheld in error, we recommend going to your employer first to request that refund back. If that's not possible, you then go to the IRS and request it back. So who is entitled to a tax treaty? So some individuals may be able to claim a tax treaty if one is applicable to them. So the United States does have tax treaties with 66 foreign countries, and that reduces the taxation on certain types of income, or in some cases exempts it entirely for a certain amount of income. Now, whether or not you are entitled to a tax treaty is based on a number of different factors, and it does change from tax treaty to tax treaty. So for instance, that could be what visa type you're on. It's the income type that you've earned, what work you're being compensated for, the duration of time you're in the US, and obviously your country of residence. So if a tax treaty is available between your country of residence and between the US, Form A233 or Form W8BEN can be used to claim this. And whether it's A233 or W8BEN will depend on the type of income that you're receiving. Next, we have a breakdown of some tax treaty examples for F1 students from India, China, Germany, Canada, and France. The same employee, being a non-resident F1 student, earning $30,000 in wages as income code 20, is paid quite differently depending on the tax treaty. So for example, the student from India's taxable wages are $15,400, as they can claim the standard deduction of $14,600. Whereas when we look at the student from France's taxable wages, that's $25,000, as their tax treaty exempts $5,000 of their income. So this slide really shows the impact that tax treaties can have and how important it is to prepare your pre-employment tax documents and provide them to your employer in a timely manner. And by doing that, this should ensure that you are taxed correctly from the get-go. So we're going to look at pre-employment tax forms now. Just a note, for University of Florida employees, UF Payroll Services will instruct you to fill out the relevant documents. And you should be on the lookout for emails from the UF Payroll Services and also the Foreign National Information System, which will be provided to you directly. So first, and maybe most common, is the W-4, which is also called the Employee's Withholding Certificate. So usually prior to employment, you likely need to fill out and file Form W-4 for your employer. It essentially helps your employer to figure out how much federal taxes to deduct from your pay. This form requires details such as your name, your address, social security number, filing status, if you have more than one job, as well as dependents and other adjustments. Then you'll need to sign the W-4 and provide it to your employer to ensure that the correct amount of federal tax is withheld. Just a note here, generally non-resident for tax purposes are only eligible to file as a single or married filing separately status. And then to note also, as a non-resident, generally you cannot claim a dependent on your tax documents. Next, we have Form 8233, which may be applicable to some of you. It's essentially a document which is used to claim a tax treaty benefit when there is a treaty between your country of residence and the US for specific types of income. So this form is generally used to claim a tax treaty withholding exemption for part of or all of your compensation for independent personal services, dependent personal services like wages, or compensatory scholarships or fellowship income and personal services income from the same withholding agent. So when we look at the comparison of impact of tax treaties on employees, we can see that the impact that the tax treaty has on employee wages, and it really highlights the importance of this form. So we do recommend that you fill out this form if you do receive it, you work with the UF Payroll Services, you complete FNIS, and you ensure that it's sent back based on the deadlines that are provided to you. The next form, Form W8BEN, may be applicable for anyone who is also receiving scholarship income in addition to that employment income we mentioned earlier. The W8BEN is also generally used for claiming tax treaty benefits, but more so on the scholarship income, royalties, or other passive income. If you're receiving a separate non-compensatory scholarship during your study and are eligible to claim a tax treaty benefit, the W8BEN can be used to claim the treaty and a reduced rate of tax withholding. And when we're talking about non-compensatory scholarships, it can include scholarships for tuition, housing allowance, books, etc. Whereas the compensatory scholarship would include things like grants provided in return for services. It could be a teaching assistant role. All of that is covered under compensatory scholarships. Next up, we'll look at the implications of misfiling. So if you're listening to this webinar and you're thinking, okay, I've been in the US for the last number of years and I've never filled anything at all, or else I filed last year, but I filed as a resident and I filed incorrectly, I would say don't panic, but do set the record straight. If you've never filed at all, I would say definitely catch up. And the good news is that if you're due a refund in the last 3 years, the IRS are happy to issue that to you. So there could be money sitting with the IRS waiting for you to collect. But if you owe the IRS money, there's no cutoff point, and they will expect you to go back as far as necessary to cover that bill with the IRS. So if you misfiled, maybe you filed as a resident and you should have filed as a non-resident, you will also need to go ahead and correct that mistake. You can do that by completing Form 1040X, which is an amended US individual income tax return. You'll also need to complete a correct Form 1040NR and then send both of those documents to the IRS, which will essentially show them the mistake that you made and what you're doing to correct that. Next up are the implications of not filing. So first off, if you are due a refund, the only way to get that back is by submitting a tax return to the IRS. Unfortunately, there's no other way that the IRS can provide that back to you if you have overpaid tax throughout the year. On the other side of that, if you owe the IRS money and you do not pay that bill, that can add up to fines or penalties, and that can accrue interest over time. But I think one of the most important aspects of this is to ensure that you're fully compliant while you're here in the US. So if you do owe the IRS money and you don't cover the tax bill, not only will those fines and penalties apply, but also it could affect your future immigration status. And you do want to be going to any future immigration meetings and interviews with all of your documents ready, being able to show that you are here as an F1 or J1 student and we're fully compliant across the board, including taxes. We also always say be careful about the options that are being recommended to you. Sprintax is a software specifically for non-residents. TurboTax is also a software, but specifically for residents. So as a non-resident, you are not permitted to use a software like TurboTax. And if you do use a software like TurboTax, they will prepare an incorrect tax return. You likely get resident credits you're not entitled to, and it's essentially considered a fraudulent tax return. So be very careful. I know at this time of year, you'll see a lot of ads for resident providers. Just be aware that as a non-resident, you do need to submit Form 1040NR for your federal return. So the last note then is on other supports that are available to you. First off, have a look at some of our educational tax videos on YouTube. You can find them by going to the Sprintax YouTube channel. Generally, we tend to cover any trending topic or any common topic that foreign nationals have. We also have the Sprintax blog, which will go into a lot of topics in more detail than our YouTube videos. So have a look there if you do need any additional information. As you're completing your tax return, we do have 24/7 live chat available to assist you in getting through that process. And you're on one of our tax workshops and webinars, so feel free to look back on any of the information we covered here at a time that works for you. But thank you everyone for listening in today. We hope that you found it beneficial, and the very best of luck with your tax return.
Thanks everyone. Thanks for listening and enjoy the rest of your day.